Hi everyone, I'm Linda. Welcome to Financial Insights. Today I want to talk about payment processors. Those are our PayPal, Stripe, Cash App. When we all first started our business, one of the first things we had to figure out probably was how our clients were going to pay us. Today it's pretty simple. There's a lot of different options, a lot of tools that we can use to get our money faster. However, there are sometimes so many options we have to take a step back. And with anything, this is where we have to do some research. So you may think, okay, why is it so important to understand payment processors? Well, it's important because not only do they benefit your business, but they do also bite into your profits. This many times we do not actually get that full picture just because when someone pays by PayPal or Stripe, we just see the net deposit and not necessarily see the fees they charge us. Nothing wrong with that, but we have to make sure that we have enough revenue to cover those costs. So today, I want to give you 4 tips on payment processors. Number 1, what are they? If you need them. Number 3, what questions you need to ask before actually implementing a new payment processor. And then number 4, what are the benefits? So number 1, what is a payment processor? Well, a payment processor, such as a PayPal or Stripe, it allows your customer to pay you without you setting up a merchant account at the bank. So if you were not going to use PayPal or Stripe, you could set up a merchant account where they could pay you directly. These days, you could actually give them your checking number, your routing number, and then they can do an ACH. And of course, the bank is going to charge you for that. So those were payment processors. There's many payment processors out there. The well-known are PayPal, Stripe, Cash App. Can't think of another one. I just had it on my tongue, but everyone's familiar with those common payment processors. Also, you need to realize that just because it's easy for your customers to pay, you also have to think about, does it integrate into your business? Does it integrate with your accounting system? Also, look at the reviews and comments for those particular payment processors. And lastly, look at the fees. Payment processors usually can charge per transaction, and not only transactional fee, but so they'll charge a certain percentage plus maybe an additional 25%. And sometimes if that transaction is over a certain amount, they may even charge more. So you want to make sure that you understand the fees. Second, do you really need a payment processor? It really depends on your business. You may not need a payment processor. So just because everyone else is using PayPal or Stripe, you don't have to go out and sign up and give them your information and tell your customer to pay that way. You have to you have to really analyze, will this make my customer pay me more quickly? And then also the customer interface, is it easy for the customer to use? Then also on your business side, is it a benefit? Is it a financial benefit? Does it make the customer, the customer journey more easy? Because if a customer goes to your landing page or your website and they need to order something, is it more appealing just to have a button right there and they can pay for it? So think about those things. Also think about the security and also fraud. So making sure that this payment processor, I would say it's well known, you've done your research, they mentioned something about security and fraud. You also need to understand when you sign up with these accounts, who is liable. So if there's fraud, will you be liable? So for instance, if your client pays, and then if their information is stolen and it gets in the wrong hands and that person uses your client's information to go rack up their credit card, you want to make sure you understand that, who is responsible for that security, and particularly if there's fraud. Lastly, I should say lastly, but number 3, questions you need to ask when you're doing your research on payment processors. Understand how it works. Don't be afraid to get on the phone and have someone actually walk you through how it will work. And take it from the viewpoint of your customer. Walk through the process. Is it easy to process? Is the page easy to understand? Is it easy to enter the information in? Will they get a receipt automatically? So take it from that approach. Also, once again, look at the price. Ask yourself, is it a flat rate? Is it a monthly rate? Because not only sometimes will they charge you per transaction, they may also charge you a monthly rate or even a flat rate monthly. So what are the benefits? Number 1, the benefit is, you get your money faster. The customer, everyone is on their phone or computer. They get that invoice or they place that order. All they have to do is put in their credit card or debit card information, and there you go. You can get your money right away. That's the number 1 benefit. Also, too, just that whole experience of that customer journey, that they'll be able to get their product or service right away. People like that feeling. So that's another benefit too with using a payment processor. Lastly, this is a bonus. You also want to think about that this is another, this is another, I don't want to say thing, but another thing that you have to manage. Because when you implement a payment processor into your business operations, you're going to have to manage that. And what I mean by that is, okay, who's going to manage that PayPal or Stripe account? Who's, the login information? Who's going to have access? Where's the security code going to be sent to? Who's going to look at the reports? So PayPal, Stripe, all of them, they have reports that you can download. Basically, everyone that has paid and then the fees. Excuse me. So who's going to review that information? Lastly, how are you going to enter that into your accounting system? So as we all know, when someone pays by PayPal or Stripe, you get a deposit right into your account. That deposit is composed of the total revenue minus the fees. That is the net deposit. A lot of times, organizations just post that net deposit to total revenue. Well, actually, that's incorrect because that is net deposit. That's not total revenue. So once again, the net deposit is revenue minus those fees. The fees actually should be booked in the expense account. So that's just one, another thing to think about. You probably want to have maybe at the most maybe two or three payment processors. I think maybe 3 is a little bit too much, for some people. But once again, think about that. There's some organizations that have like 4 or 5 or 6. That can get out of hand because remember, someone has to manage that process. So that is a bonus. So remember, once again, if anything you integrate into your business, who is going to manage that process? So hopefully this information is helpful. I challenge you to actually pull your payment processor report. Look, and what I mean by that, so for instance, with PayPal, you can pull a transaction list. You can see all the transactions, all the sales that came in, and then the expenses. The fees. So look at that and just see how much money you're actually spending on fees. So I challenge you to do that, just to take a look at it. And you probably should do that probably on a quarterly annual basis to say, okay, is this in line with my my business goal? Because you want to make sure that your revenue can cover those fees. So once again, thanks for watching. Make sure you subscribe to our YouTube channel, Insight Financial. I'll see you next time.